George Godber. He manages £150 million worth of assets at Matterley. Nice to see you, George. First of all, let's just start with the rioting that we're seeing around London. What's your reaction?
Yeah, fairly shocking to see the scenes and to see it spread like it has. I think, there's obviously, we've seen a very significant reaction. Boris Johnson, David Cameron coming quite rightly back from holiday. And I think this is the point at which you get genuine uproar in the voters for the politicians to actually start getting a grip on the situation.
What does it mean for the economy then, for sentiment?
Sentiment's already pretty low and pretty battered. I think the general population understand that we've got to live within our means and the cuts must happen. I think, if we're getting a clear indication of that, in the last week, with what's happened in America and elsewhere around the world, then that has been ratified. But, clearly, I think, people have been going to be extremely unhappy with, the lack of decisive action from the police so far.
When we look at what's happening in the markets, the bloodbath that we're seeing, the sea of red all around the world, is it pure emotion? Are there fundamentals behind this? I mean, some people have pointed out this isn't really, you might not be able to describe it as panic selling, because actually investors are just taking the markets lower and lower and lower by the hour almost.
Yeah, I think it started off with quite an orderly sell-off with the weaker ISM number and, the fears of the US going into recession. Now, quite clearly, I think we've moved from that to a point of pricing in a double dip. And actually, I think by Friday we had started to see some proper capitulation. And certainly, I don't know where we open today, but,
When do you see the bottom?
Well, I've probably been too early on this. I certainly put my own cash into the market that was sat in my SIP on Friday. I thought there was some, I personally think you're now at the stage where you have to look at what are the franchises you want to own, what do you want to own long term, and the UK equity market now yields more than gilts, and that's quite crazy in the inflationary environment.
So you think there's reason to put cash to work in the equity markets at the moment? Which companies would you be buying at the moment?
Well, I think the first point is, what's the franchise that I'm happy to own, and where do I see this got significant asset backing with limited debt that I'm willing to own those franchises come what may. The sort of stocks I've been buying recently, Smith & Nephew on 10 times earnings. That is a franchise that's going to be around in 5-10 years time, provided it doesn't ultimately get taken over by a bigger predator. Millennium Copthorne exposes me to Asian real estate, no debt. You saw last week with their numbers, they're realising land in Kuala Lumpur at twice book. It's a very conservative book value. On top of that, I look at really interesting situations like Cairn Energy, that now trades below its cash and the value of its listed stake in Cairn India. And so therefore you're getting the rest of the company implied for a negative value of $1 billion. That's really quite interesting. So
you're still picking pretty carefully here in these UK companies. But you mentioned trying to get some exposure to the Asian property market there. That's kind of a risky bet at this moment in time, isn't it?
Well, I think risky, but it depends on what are you buying. If you're buying Millennium Copthorne, you're paying a stock that's trading on 10 times earnings. What does it own? Trophy assets and gateway cities around the world: Beijing, Singapore, New York, London. And time has told you that actually if you step up and buy those when the market is offering them to you at a decent discount to their true worth, then actually there are always buyers of those assets. And it's interesting that they are realising property at well above what they're holding at their book value. So I don't actually see it as risky at the moment.
What's your window in these investments?
Well, I can't tell you whether the markets, continue to fall, today, tomorrow, for the rest of this week. But certainly, the way I look at it, I run a deep value, long-only UK equity fund. I'm very happy to be buying here on a 6 to 12 month view. And I think if you're not willing to step up and buy when markets just had a 20% correction, then really, when is the time that you're willing to?
And very quickly, do you think that it's justified that we see UK gilt yields falling? Is UK debt really a safe haven?
I don't know when the bond vigilantes will turn their attention to the UK, but ultimately all we've done is slow the growth of government spending. We're still going to end this Parliament with over $1 trillion of debt, but you can't do anything but applaud to the fact that they have tried to deal with their problems and tried to address it.
And there's been less political deadlock here, certainly, than there has been in the US and Europe.
Exactly.
Okay. All right, we're going to have to leave it there. George Godber, thanks so much for being with us.